สวัสดีค่ะทุกท่านโอเคเช่นเดิมนะคะยินดีต้อนรับสู่ไลฟ์ของเรานะคะที่แพลนกันไว้นะว่าวันอาทิตย์นี้เนี่ยแซนจะเชิญอาจารย์แอนดรูนะคะมาพูดคุยกันในหัวข้อ how to prepare for the coming crisis เนาะแล้วก็วันนี้เนี่ยอาจารย์แอนดรูอยู่กับเราแล้วนะคะซึ่งวันนี้เนี่ยเราอาจจะมีเวลาน้อยสักหน่อยจะมีเวลาเพียงแค่1ชั่วโมงเท่านั้นนะคะอาจารย์แอนดรูจะต้องไปสอนต่อนะคะฉันก็เลยอาจจะต้องขอว่าตัวไลฟ์เนี้ยเราจะคุยกันเป็นภาษาอังกฤษนะคะทั้งหมดแล้วเช่นเดิมเดี๋ยวจะมี recap นะคะแล้วก็มาพิมพ์สรุปให้กับทุกท่านที่อาจจะไม่ได้สันทัดภาษาอังกฤษนักนะคะให้มาอ่านกันทีหลังนะคะก็ยังไงก็ตามขออนุญาตเชิญอาจารย์แอนดรูนะคะมาณที่นี้
Good to see
Hello.
you.
Yes. Thank you so much for being with us today.
It's my pleasure.
Yep, thank you. So, as you know, actually, it is always my honor to talk to you about finance, economics updates, and especially for this time that we are going to talk about how to prepare for the upcoming crisis. And I also believe that our audience looking forward to this live.
I'm looking forward to sharing, what's going on in my head.
Yeah, okay. So, yeah, let's start. Okay. Before we going to that topic, maybe we start from where we left on the last live that we have together. I have tracked back that we talk the last time that we talked is was in December 2023. So that time we talking about this six. Let me. Okay, we are talking about what to expect in 2024, and you have provided six events that you think we are gonna be facing so far. So I check back and I have found that number two we see it already. Number five, the outperforming of Japanese stock market. We are seeing 14% increase of the Japanese stock market from beginning of this year. So it's actually myself is very surprising as well. And for number six, yeah, we are still seeing an underperforming of Chinese market. So 3 of 6 are already right there already. So today's maybe number 1, 3, and 4. I would like you to help guiding us that we are having 5 months left. So are we seeing Trump or we are seeing Kamala in this U.S. election? So are we going to see the ESG backlash and U.S. Dollar gonna be appreciated?
Yep. Shall we talk about U.S. elections for a couple minutes?
Okay.
So at that time, at the end of last year, I was saying that it's going to be Gavin Newsom who's going to be the new president in 2005 after the November election. And part of the reason why I was saying that is that I didn't believe that Biden was going to be the candidate. And I didn't think that they were going to put up Kamala because she has nothing. She's never really done anything remarkable, whereas Gavin Newsom has done a lot of things that the Democrat Party likes. So, but they surprised me when they put up Kamala because really she's a very unimpressive candidate. But I also think that they're dooming themselves to failure because she can't inspire people with her vision and that type of thing because she hasn't really accomplished that much. So that's the first. Now, what I said before, I still stand by that the Democrat Party will do everything they can, including assassination, to stop Trump.
Wow.
And it may not be the Democrat Party itself that's doing the assassination, but the pressures that they're putting on the anti-Trump concept is so strong that I think it can lead to that. So now something's happened over the last couple of days, and that is the independent candidate, Robert F. Kennedy Jr., who is quite popular with a portion of Democrats and a portion of Republicans, has just said he's going to join Trump.
Oh, wow.
And this is a huge move for Trump. And it almost guarantees that Trump is going to win. And it's remarkable because Kennedy was a Democrat. His whole family, his uncle, his father, his grandfather, all of them were Democrats. And the Democrat Party is so against him that they're doing everything they can to stop him. And part of the reason why he had to stop is because he's been fighting the Democrat Party in every state to get his name on the ballot. So this is a huge move that's just happened. And it also shows that Trump is able to build a coalition of strong people. Because his candidate for vice president, J.D. Vance, is pretty tough and pretty strong. And Robert F. Kennedy Jr. is very strong. And so it gives some indication that Trump's going to pull together a strong team. But this makes the Democrat Party even more mad and even more intent on destroying Trump and Kennedy, which they're after Kennedy very hard. And we never forget that the Democrat Party controls the media. The Democrat Party controls the deep state, the FBI, the CIA, and the Democrat Party controls the social media companies also. Because all of these groups want Democrat, they don't want Trump. And we're talking about a huge amount of power. So though I think Trump's moves that he's making are going to get him to win this election, I also think that the Democrat Party is going to do everything they can to try to stop him. And I think in the end, the Democrat Party is going to win. And Trump's not going to be able to take office. But it's going to require that they pull all of the manipulations that they have, to get there. So that's why I still am on the prediction that Trump will not be allowed to win. So that's where I'm at with the U.S. right now. And if the Democrats win, I would say it's more negative for the economy and for the stock market. And if Trump wins, I would say it's short-term positive. But the problems of debt and other problems in America are so huge that, it's not like he can just spend his way out.
Right. Wow. And actually, it's surprising me a lot. I personally, after the assassination that somebody tried to do with Trump, I would think about, maybe this time Trump will win, since he is on the favored side of the people. But I haven't thought about, Democrat will do everything they can to get rid of Trump. So, okay, let's see who is going to win this election.
There's a little bit of parallel between Thaksin Shinawatra in Thailand and Trump. Thaksin's opponents have all the levers of power. And they still, to this day, hate him so much that they are really will do everything they can against him. And I think that Trump brings out the same type of feeling.
I see. Okay. Yeah. Thank you for these opinions. So how about
the ESG is the next one.
Yes.
That I'm still predicting some ESG backlash. There has been some movement in this. The first is in January of 2024, Florida passed a law that prohibited its pension funds from using ESG. So that was the first thing that happened this year. The second thing is that Texas in March filed a lawsuit with against J.P. Morgan Chase and some other banks and accused them of boycotting fossil fuel companies due to ESG.
Mm-hmm.
And then in April, BlackRock basically said that they're going to reduce their focus on climate-related shareholder proposals and go back to financial returns. And another thing that happened was the SEC also delayed its climate disclosure rules in February. And basically the Chamber of Commerce is pushing back and businesses are pushing back hard on that. And so, these are some of what I'm seeing, including in May, HSBC basically closed its global sustainability equity fund due to underperformance and declining interest. And so I see a continued attack on ESG. And if Trump gets in, it's going to get much, much stronger. If Harris gets in, ESG will get some support from the government.
I see. So Democrat is favoring ESG while Republican is against it, right?
Correct.
I see. Andrew, however, I remember that there will be regulation as you mentioned about SEC asking for company to submit their financial statement, including some ESG part in the accounting standard. So based on that, you are saying that they are going to delay and companies are pushing back. Is this
Well, you
correct?
have to consider that Europe is pushing strong for ESG. And in international accounting, standards boards and regulators and the like are still very pro ESG. And so the American accountants and the American Congress is pushing back, but they're not pushing back in Europe. And so it's very possible. And Thailand's not pushing back. Thailand loves ESG, right? And they're on the bandwagon, following this bandwagon like it's the best thing. I haven't looked at the performance of the ESG funds that came out when the government was pushing.
Last year.
Have you seen the performance of those funds? I haven't looked at it.
Yep, haven't seen it yet.
I suspect they're underperforming.
Maybe I search.
Yeah, see if you can find it. But I would say it's going to be a push and a pull. But Europe is a key thing. Europe is exporting regulation. That's what they're doing now. That's like their number one export is regulation.
Okay, I can search for one fund managing by Krungศรี. It's called KrungศรีEnhance Set Thailand ESG Fund. So far, year to date is minus 8%. But
and what does it say? It's benchmark.
It's comparing with its benchmark. They are saying that its benchmark is the set ESG TRI, which is minus 7%.
Okay. Yeah. So I would look at more than just that one, but I suspect that we've got underperformance in the ESG. Even if it's outperformance for a bit, it's to me impossible that it can be an ESG fund and long-term outperform. Just can't be. For many reasons, such as limiting the number of stocks that you can buy. By reducing the number of stocks because of ESG scores, you're going to reduce your potential for return. The second thing is that there's additional costs that are related to tracking ESG that the fund managers will bear. And so ESG is not cheap. It's more expensive than typical funds.
Right.
So it's hard to outperform them. And of course, when you reduce the number of stocks that you're able to pick from, you're also reducing the diversification. So in that case, I think you'll end up with a risk-adjusted return that is less than a standard, let's say, set index fund. I haven't done a study on. Actually, it's a great study to do.
Yes.
I just had my students in the Masters in Finance at Chula just this last week have argued. We had a debate about ESG, and then we had a debate yesterday about KPIs and whether KPIs are a good or a bad thing for implementing in a company. So.
Yep. So we haven't talked about greenwashing yet, which is the hidden agenda of the ESG. So maybe there are several reasons why ESG might not performing. So let's see, and I will wait for the study from the students.
Yes, let's see.
Okay, so the last one is US dollar appreciation. So 5 months left. What do you think?
Yeah, I mean, I think that if we go into recession, I think that there's a trend to go into US dollars because it's the low risk asset. And so I think that's number one. And when we see the, let's say, uncertainty in the world, I think the dollar, let's say conflicts, it causes the dollar to be strong. So I still feel like it's strong dollar time. It's going to be interesting, when Trump comes in, because I think he will stop the wars very quickly. And that means maybe less people go into the low risk asset of US dollar. And eventually people are going to lose confidence in the US dollar, but that could be years away. So I would say still US dollar appreciation.
Okay. Yep. Thank you. So let's moving forward to our discussion today. Last year in August, we have talked about the warning signs of impending recession, and you gave us 5 signs of that it's supposed to the recession supposed to arrive in around Q1 this year. So number one is the business you prepare for the recession, and they are having a lot of serious malinvestment. The yield curve was inverted so far, and I believe that it was inverted almost 2 years already.
Incredible.
Yeah, US is now at peak employment, and business lendings very slow. Real estate loans is gonna be followed soon. And the last one is the composite lending indicators. Every composite lending indicator were falling at that time, and I believe it is falling at this time as well. So I did some research and then to check what is the sentiment or what is this right now based on the indicator that you have given us last year. First one, the inverted yield curve, as I say, is inverted. If we use 10 years and 2 years spread, it was inverted since around June 2022, and so far it's 2 years and 2 months already, and we haven't reached the recession yet. This is very incredible. Yes. Second one, the unemployment rate. You said that it's at the highest employment level, and I see the trend is going up. This one is the unemployment, and it's going up. Look at the numbers in the last row. It's saying that it's going up as well. It's keeping from 3.7 and now it's 4.3 is unemployment rate already, and the trend is keeping up.
But it's still very, very low. And
Right.
That just tells me that it's the things are still very tight. So I
Yes.
think that sign is still there. Go ahead, keep going with this.
Yep. Number 3, you saying the investment, but I cannot find those numbers, so I used the commercial real estate investment. So this may be included the modification of the shops and the new shopping malls, new commercials building. So the trend is going down rapidly since 2022.
Yep.
Yeah. And the last one is a composite leading indicators. So I use the conference board leading index. This index is an accumulated of many index that showing the sign of recession. And I cannot remember who created this, but there was using a lot in the market. And if this number is below minus 4.5%, it means we are in the recession. And it's a very good indicator that can predict many recession in the past. And for now, we are reaching about minus 7%, and the recession is not coming yet.
Screaming recession. Yep.
Sorry?
Screaming recession.
Right. Screaming recession. Interest rate at when the Fed start to reduce or decrease the interest rate, we should seeing the recession. So maybe these indicators, these proxies can maybe the best prediction for this time because they are not reduced the rate yet. So it means we are not going to the recession.
Yeah, recession's not here yet, but
Right. Yep. So the last indicators that I believe it is very strong indicator that showing that we are not in the recession is the stock market.
Yep.
S&P is going up 20% this year, and it's very surprising again that on the beginning of this month is what there was a correction around 9 to 10%, and in only 2 weeks the the stock going up back to the same level again. So what I'm gonna saying, Ajahn Andrew, is very confusing at this time. Are we heading to recession or are we in it already? So and how should we prepare for this coming crisis? I believe is as far as we are avoiding recession, the next recession will be very strong and very depressing. So I think it's coming to what is the main topics of today.
Yep. And I would say that the first thing is if you go back a couple slides.
Yes.
Let's just go back one. Yeah, there. So if you look at that tiny gray line to the right, which is the COVID, the tiny one, go over to the right. Yeah. I would say that COVID recession may have been very hard in the sense that many businesses went out of business. And the economy actually did okay because, number one, bigger companies were able to increase their profit margins because competitors were going out. And also because the government's been flooding, the economy with government spending. And that meant that those businesses got wiped out like in a flash of light. And then the big businesses were able to pick it up and take it from there. So it is possible that the reason why we haven't gotten a recession is because maybe we already wiped out, 500,000 companies, let's say in America, as an example, through that period of time. So that's one of my hypotheses as to why. So there's two hypotheses as to why we continue on without a deep recession. And that the second one is just the power of government spending. The lag time of government spending takes a long time for that to feed into the economy and have a multiplier effect in the economy. And the government hasn't slowed spending that much. They're still spending quite a bit. And so it could be that those are the things that just have prevented us from going into a deep recession.
I see.
Yeah, and I would say the thing that I would talk about is protecting our portfolio. So I like to think about that first, and then we'll talk about protecting our profit and the value of
Okay.
our business and all that. But the number one most diversifying asset is bonds, because they tend to have a slightly negative correlation to the equity market. Let's say a 10% correlation. So if the equity market fell by 10%, bonds would rise by 10% because they have a negative correlation like that.
Mm-hmm.
And so I think that it's important to make sure you have some of these bonds. It can be Thai bonds, it can be global bonds. The bond fund that we're using right now is SCB Global, and that provides a reasonable amount of diversification. But I wouldn't say it provides a huge amount, because the correlation of that fund is still a little bit high. It's not negative 20, which is the reason why I'm going to be launching a bond fund. And in the next
Oh.
couple of months, I'm going to launch a bond fund specifically for my client base that I'll use through Phenomena to try to create a bond fund through ETFs in the US that can really give me a negative correlation so that I can use that in my portfolio. So the point is that for our portfolios, we do want to make sure that we have bonds that have a negative correlation if we can, or at least a minimal. Because if the equity market falls, we want to have a portion in bonds to protect the downside. The second thing is gold. And gold has let's say a 0% correlation with the stock market.
Mm-hmm.
Last 10 or 15 years, sometimes it's maybe 20% positive, sometimes maybe 20% negative, but over the long run, it's been zero.
Oh, this is I haven't heard about this.
Yeah.
Wow.
And so these two asset classes are critical to have in a portfolio. Now, the question is, how much should you have in a portfolio to protect your wealth,
Right.
your portfolio? I think one of the lessons I learned over the years is that never get too confident in your idea about anything, because the markets are just too complex.
Yes.
I just had lunch and coffee with some old friends of mine, and they were asking me about something around this, and we were sitting around a lake in their development, and they asked me, can quantitative models help us predict the stock market and produce performance? I said, you have to remember that the stock market is like this lake. Imagine that the fish are smart, and when a bunch of people have their fishing poles in the lake and they're catching the fish see that the fish
Right.
are getting caught. So they're going to run away to another area. They're going to adapt. And then when you see then all the fishermen spread out and they go to different areas. And
Mm-hmm.
then when one starts to get more fish, they all run to that area. And then they start to get more fish, and then the fish start to realize, and then the fish move on. Of course, fish aren't that smart, but market participants in the market are. And this is why it's so hard for quantitative models to predict the market and gain from their predictions, because they get competed away. And so there's been some good research showing that the markets are much more efficient. And therefore, you just don't want to get overly confident in your idea. And so that's my first recommendation. Don't be overly confident. And overconfidence is one of the main behavioral biases that we have. So I would say that you're going to have somewhere between 0 and 15 or 20% of a portfolio in stocks or gold. You don't want to end up with 50% in
Mm-hmm.
something like that, because ultimately it's stocks that perform in the long run.
Yes.
So you just have to have some of that stock portfolio, but you just have to be upping your lower risk or negatively correlated. Of course, someone may say, well, Andrew, I'm not that sophisticated. That's fine. Just take a portion of your money and bring it into cash. And instead of using bonds and gold, just use cash as your way of protecting yourself from a market downturn. But don't take 50% of your portfolio, because then what if we're wrong and the market flies?
Right.
Exposure. But maybe you go, that 0 to 20% maybe in cash. Because it is important, to have cash when the market falls, because you need that to then invest at that time. So I think that is really, to me, number one risk management tool.
Okay. Can I ask, or maybe let me recap and then I will ask some questions. So you are saying that we should diversify. So having cash, bonds, gold, and stocks. So having cash for the times where stock market crash. So we have cash to buy some good stock at the good price. So we should have bond, since bond is has a negative correlation with stocks, and during a stock market crash, we can have this as our protection or hedging our portfolio position. We should have gold as well, since it has a zero correlation with stocks. And I think I will research more about this because it's very interesting. I thought that it has a negative correlation, but so it's zero. Okay. And finally, we should have stocks in our portfolio as well, since we might be wrong. Stock market might not crash, and stock is the one asset that help grow our portfolio. So we should have it in our portfolio all the time. And when I want to ask about bonds, Andrew, should we hold a global bonds, or can we hold just Thai bonds, since it's some
I
investor
think you can hold Thai bonds. To keep it simple, I would hold just Thai bonds.
Okay.
I do have a chart on this. If you want me to share it, it could be interesting. Hold on.
Yes, please.
Hold on. Let me just. Can you see that?
Yes.
So this is a, let me just get my pen. This is a 3-year rolling correlation going back to 2003. And as I said, gold is kind of above, a little bit above, and then below. So it comes out to about 0% for gold. But it's the red line, that's the bonds, that has a negative correlation, keeping in mind that this is 0 at this point. And this is also shows a reason why you want to be careful about using commodities as a diversifier, because they're too highly correlated with world equity or with equity, so that most of the time it's positive and it can go as high as 70%. So I do still own some commodities, but I'm also very careful not to hold commodities too long, except during a time when we have a high inflationary period.
I see.
So this just gives a picture about, bonds. Let me stop sharing my screen. Hold on. There we go. So that gives a picture about the correlation, so you can see that. And the main thing also, I just want to make sure is very, very clear. The only thing that you truly should be investing in is stocks. Bonds and gold are tools. They occasionally perform well, but they're tools to manage the risk of the portfolio. But a lot of people want to see them as a core investment. I look at them as a hedging tool that gives me a little bit of hedging on the long-term performance of the stocks. So for those people that get confused or frustrated or overwhelmed, there really is only one asset class you got to focus on, and that is making sure you have stocks.
Yes, I see. Thank you for your recommendation. I think many people invest in gold because this year is outperforming very well. It's going up, if I remember, 20% so far. Yeah, starting from January this year. So many people rushing to gold. However, when I was asked from my fan page about, oh, should I invest in gold right now, or is it too high already, I will go back to them and ask them a questions that what is your objective of investment in gold at the beginning? Are you use it as a hedging tools for inflation hedge, or use for hedging the stock market, or are you going to be a speculations on gold? You have to be clear on the objectives and your purpose before you can decide what the next step on how you're going to sell it or buy it more. So I think it's very aligned.
Yeah, I think it's the way to think about it. And you could even say, for your gold that you see as like a long-term investment, go buy some gold bars and put them in your safe, and hold them for the next 5 or 10 years. And then, hopefully you'll get a return. If you did that 20 or 30 years ago, you wouldn't have great returns compared to the stock market. But in your portfolio, you want to make sure that you're adding gold as a diversifier, not as a core asset that you're going to try to gain from.
Okay. Yes. And so you are talking about how we're gonna make profit during the recession, right?
Yeah. So a core thing that I do is one of my services is Profit Bootcamp, where I help mid-sized family businesses double their profits in 12 months without overwhelming their team. And I thought I would share some of my experiences with it so that your audience could go back and apply some of the things. And if your audience is interested, we can talk more about understanding. So the first thing that I want to highlight is the importance of understanding where you are today. And in order to get that understanding, you have to have on-time and accurate monthly financial statements.
Mm-hmm.
If your financial statements are late, now you must stop that and set the time. It's on the 25th or whatever time of each month, and be relentless at not letting that slide. So on time and accurate monthly financial statements are critical now as we go into a potential recession. The second thing, and getting to that for some people is hard, very hard. Their accounting system, their accounting people can't get them. Mm-hmm. And that's one of the things that we do is try to help companies to get there. Second thing that you need to do is you need to make sure that you have about 15% of your assets in cash. The average is about 12% right now. And you need to be at about 15%. So all you have to do to calculate this is look at your latest cash, look at your latest assets, and do the calculation. Now, the global average for this, which I went through just before we met, the global average is 12%. That's over 29 years, almost 3 decades. The average is 12%. And that's the reason why I'm saying that you should be above average at 15%. Mm-hmm. If you're sitting on 15% of your assets as cash, then you have the power to withstand the recession, and you have the cash to take advantage of opportunities that come out from the recession. And so that's the second thing, is 15% cash as a percent of assets. And the last thing related to this is the concept of hitting about a 10% net profit margin.
Mm-hmm.
If you're not at a 10% net profit margin, you need to get there as fast as possible. Because when an economic collapse happens, when a recession happens, revenue's going to come down and you're going to face a difficult situation. If your net margin is at 10%, chances are that a bad month, you're still going to be positive. But if your net margin is average at 6%, then you're going to get close to a loss in the bad years. And of course, most Thai companies these days have a really low net margin, like 4 or 5%.
Oh, wow.
In that case, you're definitely going negative. It's going to be really tough. So that's the second thing, is having cash at 15%. And then the last thing is the idea of the net profit margin. And the net profit margin ultimately should be at about 10%. And with that net profit margin, we can build up our cash. I had a guest on my podcast, and the title of his episode was Cash is Not King. Cash flow is king. Because cash is created from the cash flow. So you need to, if you can get your net margin up to 10%, chances are you're going to have a very good cash flow, because cash flow is a function of your profitability,
Mm-hmm.
your investment in net fixed assets and your investment in fixed assets. But you've got to get that strong profitability to drive that cash flow. So those are the things that I'm looking at. I pulled together a list of what I think are kind of the main issues, and maybe I'll present that. How about that? Let's see if I
Yes.
can find
Okay.
it. All right, hold on.
Okay.
All right.
Okay, here we go.
So these are 8 things that we address in the Profit Bootcamp, but you can go back and work on these, right away. So the first one is, most companies have a lack of clarity. You've got to move from a lack of clarity to a very clear vision of where you're driving your company. That is critical. You've got to move from doing it alone to collaboration. One of the things that happens in a lot of companies is that they operate in their own area and they don't think about the collaboration aspect. But without collaboration, you're never going to double profits or prepare yourself for a recession. You've also got to move from a negative mindset to optimism, where you believe that you can bring the company through a tough time and come out stronger.
Mm-hmm.
This one is a particularly important one for Thailand, because Thai people don't like to have conflict. Am I right?
I think so.
Yeah, I think Thai people don't like conflict. So they'd rather avoid that
Why?
conflict
Yes.
by not talking about it.
Mm-hmm.
And so a lot of what I do in the Profit Bootcamp is to try to resolve every conflict that's in the company. It's not easy, but if we can get through those, we can get to profit. The other one is poor planning and execution, which we have to go to be good planning and execution. And then a lack of discipline to discipline. This one is really about, how does the senior management team keep the company focused relentlessly every single day? One of the companies I find so fascinating is Toyota, because it's just so amazing that they just keep their focus, keep true to their mission, keep their operating system strong. They have tremendous discipline. And we need to move to being resilient, because when we get into a rough time or a recession, it's going to challenge you, and you've got to be strong to bounce back. And lastly is the idea of focus. We need to focus. So these are the things that I share in my work with the Profit Bootcamp, that I try to help people see that we got to try to resolve these issues. Most problems that companies face that are low profit are not that complex. It's usually teamwork, collaboration, communication, a common goal. So that's why some people will say, how do you feel so confident that you can double profits of a company? And I always say, I think it's not that difficult, because humans mess up, and then they fight, and then all kinds of different problems happen in a company. And until you resolve those problems, Now, the other thing that I do in the Profit Bootcamp is I benchmark each of my clients every single month so that we can see the truth, which can be very frustrating, right? But I want to see the truth of how this company ranks relative to its global peers. And I want the company to see that. And that's, a strong motivating factor.
Wow. So we use this framework for evaluating the company in the stock market right now as well. So are
Well,
there not? Yeah. Mhm.
I mean, I think you can. I would say it's more applicable to a family business,
I
but I
see.
do think a lot of it has to do with what's going on in companies right now. And I think companies are struggling. Everybody's struggling in Thailand right now, it feels like, from the people I talk to. And
Yeah.
that means you got to think different. So one of my clients was talking about how their revenue falls every April. Of course, with
Very
Songkran and
true.
all that. Yep.
Yes.
And so they said, there's nothing we can do about that. And I said, the fact is that if you know you have a regular dip coming, you can change all kinds of things in the way you deliver, the type of product that you may sell, how you'll bundle that product with others during that time to maintain that, growth. So that's something I think we got to always be adaptable, in business. But it's been great working with businesses, and my goal is I want to help 50 families in the next 5 years. And I want to help them resolve the problems, get focus, get clarity, build teamwork and collaboration. And it's not difficult. 2 companies that I've been working with just came out of my Profit Bootcamp after 12 months. One, we tripled their profit, and the other one, we 5x their profits in 12 months.
Wow.
So I have no doubt for anybody out there that sincerely wants to double their profits that we can do that.
Yeah. I after talking to you and listening to this profit bootcamp, I still have a confidence in Thai economies. I believe there are a lot of SMEs or Thai corporate that they are struggling with something that they don't know as well what they are struggling. So if they can have clarity, they have focus, and they have someone that can help them finding the root cause or finding what are they struggling. I think there are a lot of room for improvement, and there will be a profit coming after that. So I thinking of maybe we have some event later, and I think this is a very very good starting point of how we can help Thai company boosting their profit.
Yeah, I think it's a great idea. And one of the things that I would do is I would benchmark all those companies that come to that event so that we can really pinpoint what's their weakness relative to global peers, and then help them, to figure it out. But I do think also that there is a large number of companies out there that are struggling maybe to make the transition from their parents to the kids, or
Yeah.
those types of things are definitely challenging. But I don't think that it's that complex to double profit. It just takes a sincere desire and a focus. And that's what I do with the people I work with. I'm at their business every 2 weeks to work and drive them, as well as having a whole course curriculum. And so once you do that, it's very hard not to double profits. But what the other thing that's happening is, I agree that there's a lot of Thai companies that are, good and will survive, but there's a tsunami of Chinese manufacturing flooding Thailand.
Yes.
And
Can
flooding,
we talk about this a bit?
yeah. And I think that this is what majority of families are dealing with. And the challenge is that it used to be easy enough for their parents and maybe them to know all of the customers and have friendly relationships.
Yes.
And they were able to get business. But when the Chinese come in, they're going to take a lot of the low end of the market, not because they're low quality. Their quality is good and getting better, but just because, that's the area that I suspect they'll attack at. And so the challenge that business owners face now is, how do you respond to intense competition from China? And I would argue you have to start doing something very differently. And that is, you need to focus your business on the products that matter the most. Number one, get rid of everything that's not the core that matters most. And you've got to figure out how to stay focused on that core products, and services that really bring in the most for you, and then drop the other stuff that you've done. The second thing, I think it's very hard for Thai companies to beat the Chinese from a cost basis.
Right.
So there's no way, if we look at
Yes.
Porter's models where he talks about differentiation versus low cost, forget low cost. Thailand cannot be a low cost leader because China has such huge volume worldwide.
Right.
China is never going to match that. Therefore, you've got to upgrade the quality, you've got to upgrade the branding, you've got to upgrade the exclusivity, and the connection with the brand. So marketing becomes really important for sure, in that era. But the idea is you've got to differentiate your product and service. What can you do that the Chinese or the low-cost competitor can't do? Whatever that is, focus in on that. And that's, one way to make sure that, the Chinese don't really destroy you.
Wow. This is very, very insightful message. And thank you for sharing this with us, Kun Andrew. Since a lot of news talking about Chinese product price today, as for example, like Temu is coming, and everything is the price dropping, and how Thai business can compete with them. So at least we know that we should be differentiate and then focus on the core values and core products that create the differentiations to the company.
Yeah, I mean, there's many instances of smaller armies defeating larger armies, but they did it by focusing on their weak point of the large army and then putting all their resources on breaking through that weak point. And that's really what Thai companies need to do, is focus. And unfortunately, everyone's addicted to the mobile phone. So right there,
Right.
everybody's struggling with focus. So
Right.
on Monday, say no phones in any meeting. Start with that, because if you can get people focused, you're going to be ahead of your competitor that's filled with people that can't focus. So
Okay. I think it's 5:55 and you have to leave soon,
yep.
right? Maybe I ask one question. Waiting for questions from the audience. Whether are there any questions? And we can end our discussion soon
มี
ใครมีคำถามอยากจะถามอาจารย์แอนดรูไหมคะพอดีวันนี้อาจารย์แอนดรูอาจจะอยู่กันกับพวกเราได้ถึงแค่ 6 โมงตรงokayคุณมนัสการ say that highly appreciated for interesting discussion yeah thank you so much yeah
most welcome
ค่ะ and here is in Thai but Kun Waradet would like to thank you for he's been waiting for you for quite a few months and he is very happy that he came and listened today
that's great thank you Waradet
yes okay I think it's 56 and I don't wanna
yeah I got a call in London today so I gotta go
oh okay I think there is one question that is very interesting will the handmade products survive in the future
only if you can brand them and differentiate them it's not enough just to make handmade you got to bring the value and a great example is Hermes all the Hermes bags are brand made or handmade there's one person making each Hermes bag and it takes them 15 days to make one bag and so yes they can but they can't survive without great branding
yeah okay I think this
good question
very
though,
important yes and very good questions okay yeah thank
all
you
right.
so much Ajahn Andrew we'll have a chat and or a next live session next time
I look forward to it okay take
thank
care
you
ครับสวัสดีครับ
สวัสดีค่ะโอเคขอบคุณนะคะทุกท่านต้องวันนี้อาจจะเซสชั่นสั้นไปนิดนึง1 ชั่วโมงเพราะว่าปกติอย่างพวกเราไม่เคยต่ำกว่า2 ชั่วโมงใช่ไหมคะเดี๋ยวอาจจะมีอีเวนต์หน้าเดี๋ยวซันจะเชิญอาจารย์แอนดรูมาพูดคุยกับพวกเราอีกนะคะโดยที่เมื่อกี้ที่ได้เกริ่นเอาไว้อาจารย์แอนดรูแกจะมีการทำเกี่ยวกับเรื่องของ benchmarking คือเปรียบเทียบว่าบริษัทที่เป็นอุตสาหกรรมประเภทนี้เนี่ยเมื่อเราดูเทียบกับทั่วโลก global นะคะเราบริษัทเนี้ยประเภทเนี้ยอยู่ในเป็นแบบจะให้คะแนนแล้วกันอยู่ใน range ไหนอยู่ในเกรดไหนเพื่อที่จะได้มาบอกได้ว่าสิ่งที่บริษัทหรือ SME กำลังทำเนี่ยอยู่ในการที่จะต้องปรับปรุงไหมหรือว่าเราถือว่าเราเป็นระดับ global แล้วนะคะก็ซายเลยคิดว่าเดี๋ยวถ้าอาจจะเป็นเซสชั่นหน้าหรือเดี๋ยวเราจัดอีเวนต์กันเล็กๆน้อยๆเนี่ยอยากจะขอเชิญผู้ฟังแฟนเพจนะคะที่เป็นเจ้าของธุรกิจหรือแบบมีความสนใจในเรื่องนี้เนี่ยเรามานั่งคุยกันนะคะแล้วก็ลองดูว่าธุรกิจของคุณเนี่ยอยู่ในเซสชั่นไหนอยู่ในเซกเตอร์ไหนอยู่ในอุตสาหกรรมไหนนะคะแล้วเดี๋ยวอาจารย์นันดูเนี่ยจะให้คำแนะนำเพื่อจะ benchmarking ว่าในเซกเตอร์นี้เนี่ยควรจะมี profit margin เท่าไหร่ควรจะมี cash position เท่าไหร่ควรจะทำรายได้ต่อปีเนี่ยอยู่ประมาณไหนเพื่อที่ว่าพอเราได้ตัวเลขมาแล้วเนี่ยจะได้เอากลับไปวิเคราะห์ว่าบริษัทของตัวเองเนี่ยตอนนี้เนี่ยอยู่ในขั้นไหนแล้วควรจะปรับปรุงในเรื่องไหนบ้างนะคะเดี๋ยวไว้เป็นเซสชั่นหน้าที่เรามีโอกาสได้มาคุยกันใหม่นะคะก็ถ้าไงวันนี้เนี่ยก็ขออนุญาตจบไลฟ์เพียงเท่านี้นะคะเช่นเดิมเดี๋ยวซันจะพยายามสรุปออกมาให้มันเป็นรวบรัดกระชับนะคะแล้วเดี๋ยวจะโพสต์ในเพจ Unplugging เหมือนเดิมนะคะสามารถไปอ่านกันได้เนาะแล้วก็ถ้ามีคำถามตรงไหนสงสัยตรงไหนก็เดี๋ยวรอถามในโพสต์นั้นได้เลยนะคะเพราะฉะนั้นก็วันนี้ก็ขอบคุณทุกท่านนะคะที่มาฟังแล้วก็มีอะไรยังไงเดี๋ยวเรามาไลฟ์หรือมาคุยกันใหม่สวัสดีค่ะ